Okay, everybody, here we go. It's me, Gregory Mannarino. Finally, we made it to 2025. Can you believe it? First trading day of the year, and it's just freaking beautiful. It really is. Look, we all know where we're going, and I'm going to tell you something right now. Last night, I was looking at data for hours, just connecting the dots. Nothing at all has changed. Moving forward into 2025, all the stuff we have spoken about appears to be exactly on target, which means you and I, look, man, we just got to remain diligent, stay ahead of the curve, raise our awareness, understand that nothing is what it appears to be, and we are being systematically eliminated. And we're going to take action here this year. There's no doubt in my mind that's where we're going. And you and I, we got this. Let them play their freaking games. They're not going to stop. But we can play the game better because we have their playbook. You understand? I think we're on the same page with this. All right, look. So as I said, first trading day of the year, January 2nd, 2025. Look, despite the fact that things do look pretty bad everywhere, we're going to remain in a positive space. You know why? Because we got each other. We got each other always, and that's not going to change. Let's move forward here, people. Look, so here we go. First trading day of the year. This is how we're starting off. Now, I want you to keep a few things in mind as we go through this. Stock futures, gleeful this morning, higher across the board. Keep in mind, we have still not recovered. In fact, we're lower than the initial 1,100 point sell-off in the Dow 2 Wednesdays ago when the Fed did lower the federal funds rate. So the market's looking to recover here. Do not, Lions, listen to me, man. Don't bottom fish. There's no reason at all for you guys, you girls, a single one of you, to rush back into this market. Me, I'm still out of here with regard to the stock market. I have no intention of jumping back in here until things line up. All right. It doesn't mean I'm a bear here. Okay. I remain neutral. I am not short this market. I am not long this market. I am very long cryptocurrencies right now, meaning I'm betting they're going to go higher. We should expect volatility. Gold, silver, commodities, massively bullish there as well. So let us move forward. So you got this morning, stock futures higher, pointing towards a higher open. You got gold, silver, crude oil, catching a bid pretty much across the board. Looks lovely and fantastic, right? Beautiful. You got Bitcoin, cryptos across the board, catching a bid. People, don't tell you again, you haven't seen anything yet. This year for 2025 is going to shock you as to where the price of cryptocurrencies go as we are bridged into the new system, as we are, again, pulled further away from any kind of a constitutional money system and thrust into a system which we neither voted for nor want, but that's what we're going to get, period, the freaking end. Now, with regard to the market here, I want you guys and girls, if you have not yet, to start paying attention to this. It's free. The MMRI, the Mannarino Market Risk Indicator. This is from this morning here. A link in the description of this video. We're still in a red zone here. Look, let's just point something out. I don't know if this is a top. No one can tell if this is a top. I understand we peaked here the April. We understand what happened in April. The market cratered after a little while. All right, we bounced back because the Fed got in here. They started buying it all. Are they going to do that again? I don't know. Maybe, maybe not. We cannot say for certain if this is a peak with regard to the MMRI where we are now. So we sit back and we just take it all in. You understand? Again, another reason not to jump in here to the freak show. Here's another reason if you need it, and I'm going to keep showing you this. This is the relationship between this black line here, the federal funds rate, and the 10-year yield. Look what happened every time we crossed over. Dot-com meltdown, financial world crisis, and that's where we are today. All right, sit back, relax, and take it in. There is no reason to rush back in here. Sit tight, my lions. I got your back. as always, when it's time to get back in here, when I feel it's time for me to get back into this market, you're going to know about it. You're going to know about it. Every single one of you is going to know exactly what I'm doing and when I'm doing it. Now, I'm not suggesting. I got to be careful here, man. You already know I got in trouble for this twice. You guys and girls are free to do whatever you want. Greg is doing this. If you think it's a good idea, it's you guys can follow suit. But understand, you gotta realize that whatever you do, there's going to be risk involved. You understand? There's no such thing as no risk here. You're in the market because of risk. On the same page? Let us move forward here with regard to some economic news. How's this one for you? This is how strong our economy is. We're booming. You know that. Mortgage demand dives 22% in 2024. People can't get by. They can't survive. We're being wiped out. The 1% and 2%ers, the wealth is being shoved right up there, harder and faster. And that mechanism may continue, may not. Let's see where it goes. Again, the grand finale, you know what it's going to be. A meltdown in the debt market, which is going to spin people's heads around like The Exorcist. Spiking of bond yields at a pace you're not going to believe. 20, 30, 40, 50 basis points with regard to the 10-year yield higher in one day. On the back of that, the stock markets of the world are going to melt down so fast. Again, your head's going to spin around like the freaking Exorcist, and cash is just going to move into commodities, in my opinion, and into cryptocurrencies. Now, here's something else I want you guys and girls to pay attention to. A headline here, CNBC, Europe, get your house in order. Really? My European friends, look, man, I've been telling you guys and girls, my heart goes out to you. And I hear from you guys and girls all the time, oh, Greg, you think you got it bad over there in the U.S. where we are? Wait till you see what it's like over here. I've been telling people this phenomenon forever. The United States is going to be the last domino to fall. We're falling already. It's not the stock market, which has no connection to reality. We all understand the mechanism here. The faster the economy falls through the floor, the higher the stock market has gone, as we said it would for, I don't know, at least 7.5 years, honestly. And that mechanism, we'll see what happens. We don't know, and there's no way for us to tell if the Federal Reserve, in this case, or central banks are going to start getting in here into the market, buying more debt, keeping rates suppressed, or are they just going to let it go? Again, this thing is going to fall. This entire world is already in a financial crisis of epic proportions. We are in a full-blown liquidity crisis. That didn't change from last year. That liquidity crisis has nowhere to go but worse moving forward into 2025 as we are right now, because the system must be fueled with exponential debt just to function at its current level. You're not allowed to know this stuff. You have to understand, no politician is going to tell you this stuff. They can't. No central banker is going to tell you this stuff, but it's a fact that the system must be fueled with more fiat currency, central bank issued notes, just to function. And this mechanism here is so destructive. Again, we understand. Look, man, I'm gonna let you in on a little secret in case you're new here, and I'm gonna tell you this again because I've been telling you this for the longest time. Does it make sense to you that to have a strong economy, you need a strong currency, and to have a strong currency, you need a corresponding rate of interest high enough to support the purchasing power of that currency? Yes, but that's being stripped away. That mechanism is a fundamental financial and economic truth which cannot be changed. But you're being told that, okay, central banks are going to be lowering rates, and that's going to help you and me to do something about inflation. You understand? When they lower rates, a central bank, or a promise from a politician to lower rates, to work with the central banks, in this case the Fed, to lower rates, it just means currency purchasing power destruction, which is a wrecking ball. You know that already. That wrecking ball is growing and growing and growing and swinging faster and harder through the world economy as we are being taken apart piece by piece. Now, with that, I want you to pay attention to this. I generally do not give a damn what multi-billionaire investors say about the market and everything else. But here's an exception. Jim Rogers. This is a guy I used to follow hardcore many years ago. The guy knows what's going on. A lot of you know who this guy is. Now, I wasn't even aware of this. One of you out here did sent this to me, and I want to share this with all of you. So this is from back in November of last year. This is what Jim Rogers had to say. Things are going to go bad soon, and he's issuing a dire warning as global markets hit record high. Now, just bear with me on this. This is what Jim had to say. Nearly every stock market in the world has hit or is near a new record high. And he says, somebody better look out the window and get worried. Okay, we never worry. We look at things and we take it in and decide what action that we need to take. Anyway, let's move forward. Jim Rogers says his caution is rooted in his own personal experience. He's been around a very long time. He said that he understands what follows market euphoria, and he said he's been around long enough and has studied the markets long enough to know when everybody is making a lot of money and piling in, it usually means that things are going to go bad soon. So is Rogers selling? That's really an important factor here. So he goes on to say that he has pulled most of his positions in the global markets. Right now, he has very little exposure to the world stock markets. Now, I'm not saying that we need to follow suit here, although you all know I got out of the market. And I got out of the market for a couple of key reasons. You all know that. I had spike in the 10-year yield, the MMRI now above 300, which I really want you guys and girls to start paying attention to. Again, I have no idea where this is going to go. I'd love to hear from you. Where do you think this is going to go? Do you think the Fed is going to perform another, hat trick and start getting in here and buying more debt to create more dependency on the system and push the stock market higher, or are they done? Again, we don't know this. The market in 2025, and this has been a phenomenon since 2008, is 100% dependent on easy money. More easy money, the promise of lower rates, easy money. That's all it is. Nothing else matters anymore. That's why there's no connection whatsoever anymore between the stock markets and the economy. And the more they can destroy the purchasing power of the currency and keep rates suppressed, the wider that doorway gets for cash to make its way into risk assets, in this case the stock market. You all know that. But again, understanding that central banks are not just the number one issuer of debt, they're also the number one buyer of debt right now. It's a revolving door, which I've been speaking about for 10 freaking years. And this is massively inflationary. You're not supposed to know that, but it's all temporary and transitory. Meanwhile, it isn't. No accountability. You can expect, again, I think the theme for 2025 is going to be number one, massive currency devaluation around the world. Europe, our European friends that are getting destroyed, that's happening here too, but you're not allowed to know that. People here in the United States are clearly the most dumbed down of any other populated nation on this planet. They have no idea what's going on there. The American people are conquered. They're a conquered people and they refuse to see it. They've been divided, therefore conquered. They can't come together and they've been divided for a reason. So they will not come together on a single issue to elicit change. Understand? It's too simple. And this is, again, a mechanism that's been used against the people, weaponized forever. The fact of the matter is, look, man, we are in an environment unlike we've ever seen before. And last night, me connecting the dots as to where we're going moving forward tells me that nothing has changed. Everything that we covered last year stands true right here and right now. And we need to be ready for anything. Always have the high ground. You know that. That's not going to change either. You understand? And again, look, our unity here, this channel that we've built, you and me, for a long time now, is the source of a lot of our power. Most of our power, and I'm going to tell you right now, whether you like it or not, I don't freaking give a damn if you don't, comes from the Almighty. Every word I say, every action I take, I consider my relationship with God the Father. And if you guys and girls don't like to hear that, because I get threatened every day, hey Greg, you know what? You mentioned God one more time, I'm unsubscribing. Please feel free to do that, because this is my perspective, and you're entitled to your own. And if it hurts you, maybe that should tell you something. Anyway, guys and girls, look, man, we got each other's backs always. We're not going to stop doing what we're doing. We're raising our awareness. We understand what's going on. It's not going to stop. Listen to guys like Jim Rogers here. This is a substantial warning. Jim, it looks like, got out in November for the most part. We rode this market right up until its peak, and it hasn't recovered since we got out. Is that a top? I have no idea. I'm not in that business. but I am in the business of watching the debt market, which is the key to this entire thing. You can expect debts and deficits to hyperballoon from here. And that is going to dramatically exacerbate the underlying issues. But you have to understand that mechanism must continue until the bridge is complete into the new system. Deregulation of the banks, massive, maybe even no regulation of the banks, the merger of cryptocurrencies and banks. Some banks, do you realize something? Check with your own bank. Your own bank may be offering you might not even know it yet, when you go to your institution and make a deposit, if there's a little spare change, 50 cents, 30 cents, 20 cents, whatever it might be, let's say you have a check for $100.29, they actually may ask you, or you may not even know, that they can offer you, if you'd like to use that spare change to invest in Bitcoin. This is what they're doing. Look it up if you don't believe me. It's already happening right now. People, you and I call this. It's going to happen. And this is, again, a key component to the new system. They got a mainstream crypto first. Then the tokenized system comes. Dependency on the system. Period. The end. You all know this. Nothing's changed. And anyway, like I said, man, we've been ahead of the curve on this. It's just an incredible thing. People, just real quick, generally on the first of the month, I ask for your support. Hey, Greg, you know what? You're doing a good job. I ask for $5. $5 a month. That's it. I don't think that's a lot, honestly. And I hope you guys and girls choose to support my work. If you do choose to support my work, please do so. There are links in the description of this video. I hope you utilize one of those avenues there to support my work. Our thing. This is our thing. You know what I mean? And I appreciate you if you do support my work. All right. Love all of you from the heart. I will see you later, 4 or 5 p.m. So let me know if you got something out of this video. All right. With that said, please, until we meet again, take care of yourselves and each other.